Welcome to Markets Now. I'm Michelle Rook with Kevin Dooling, KD Investors, and the livestock futures seeing a pretty good update on Wednesday. We tried to bounce in the grains, but kind of ending mixed to lower here. And Kevin, let's talk about the grain trade first of all. We are sorely overdue for a correction here in the market, but why are we struggling so much in the grains?
Well, that's been a really big question. I expected a pullback a while back and it would be significant, but I didn't think we'd continue to just go on and on and on and grind lower and lower. So it's exceeded my expectations by a lot. And so as far as reasonings, I think the number one is just the funds get the momentum up. They've got the volume and down we go. We really don't have any smoking guns saying things are tight enough to suggest that we have to rally out of here. We are seeing improvements in the cash trade and basis levels across the country and just about every grain. So that suggests we should be close to getting a cash-led market or cash-led rally. The futures will have to follow at some point, but this is a really difficult market. It's if you look at that wheat trade in the last 2 months, it's rather shocking to see those kind of moves and just counter each other out. Yet the fundamental picture hasn't changed a whole lot. So I'm not going to say the market's broken, but I'm going to say that it's different, and we're having to what do I say? Relearn, re-evolve with it as the human element to these markets becomes less and less. We have to rethink how we're trading these markets. So
in the case of the row crops, Kevin, do you think that part of the pressure has just been this rain makes grain mentality, this idea that the Eastern Corn Belt is cooler and wetter, and that's kind of trumping some of the problems we're seeing maybe in other areas of the Corn Belt with flooding?
I think that's a large part of it. And I don't know how the computers are programmed. I don't know if they're programmed to say, well, rain in June is bullish. I don't think they can, there's any way to do that. And looking at the longer term maps this week, everywhere's got, elevated chances of above normal precipitation. So, despite the heat, there are going to be some really muggy conditions out there, but I don't think we're not seeing that dome develop where it's dry. And as far along as that doesn't exist, the funds aren't going to have a reason to cover yet. So it's going to come, we looked at those flooding problems last week. We looked at the heat in the Southeast and we said, okay, we definitely got some problems, but they're just not, they're not large enough yet to get the computers to flip over. So not sure what that'll take. Like I say, the encouraging part is the cash trade firming and the basis improving. That's the one piece that I feel like we can hang our hat on that signals that maybe we're getting too cheap here. So by a lot.
What about the fact that we've got the reports coming up here on Friday? Do you think that the market is already trading a bearish report or reports?
I think it would take an exceptionally bearish report to continue to add more bearish pressure to these markets. So to my opinion, bearish report should be bought. These numbers are not sustainable. And, if you use a USDA balance sheet of any kind, if we're going to drop prices like this, you've got to have the demand increase on the other side of it. And that's the piece that, I feel like the bears try to push on us, is that demand is not going to improve despite the market moving lower, and that just doesn't hold weight. Especially you look at the wheat market, how tight it is on the world balance sheet, and if we're going to go down to sub break-even levels, $1.50 below cost of production, then you better believe there's going to be an increase in demand at those levels too, and there's not, at least as far as the report goes. They're bleeding off demand as well. So, like I say, something has to give there. I'm still somewhat optimistic in the wheat market as far as the row crops. I'm scared of soybeans a little bit. Just not seeing China enough, and with corn, it's we'll see how this weather season goes. I don't think the hybrids are really set up for really wet feet the whole year. So I'll be curious to see how those go. But like I say, the market's going to try and argue with us until harvest, I think. So
yeah. What are you anticipating in the reports in terms of acreage changes?
Oh, I wouldn't be surprised to see a bump in corn, even though, I mean, it's not because I expect that. It's just I expect USDA to put that in there. I really don't think that's the case. I think everything probably backed off a little bit from people I talked to, especially in the northern Midwest. I think there were some issues there. So I would hope and expect it to stay rather flat, but just my experience with USDA, I would not be surprised to see a little increase in those, and that'll get spun as bearish at first, but I'm hoping I'm wrong on that.
So specifically on the wheat market, we've pretty much taken out most of or all of the spring rally. Do you think that's been technical selling, harvest pressure in the northern hemisphere, or why have we seen so much pressure there in such a big correction?
You've got pretty much the whole northern hemisphere in full swing right now. So there's definitely some harvest pressure there. But as we keep dropping, I think that's going to ease off. I mean, if you're selling here, it's just a cash flow or a basis play. You're not selling it outright because you think you're going to make money on it, because you're not. And I think as we probably cross the halfway point overall, that pressure is going to fall off significantly. And, we'll see the importers, the importers are working. I mean, there's a lot of demand moving right now. We saw a great number last week in the US, expect another good number tomorrow this week. And, and that northern African region that was so droughty, they're going to have a lot of wheat to buy, and they're buying every break so far.
So as far as the grains, are we getting close to a low, do you think? And if we get a recovery, how much can we expect?
Well, it's going to vary by grain. I'm not expecting a big recovery in soybeans. I just don't see any reason why, unless China really steps up their daily purchases, why we're going to bounce a lot. I mean, I certainly expect, 50 cents would certainly not be out. I mean, that makes sense to me. Corn, it could follow wheat a little bit. I would expect corn to have some moves here, especially if we keep the elevated overnight temperatures. We'll see how the corn reacts to the wet feet. I would think that corn's got some recovery there. I'm amazed that the funds have stayed this short through it. I did read a stat where the only time they've been this short through this time of year was during the initial trade war. So maybe they're trying to factor that in, and we don't move till fall. Wheat, I think, is going to end up with a cash-led market rally, or cash-led rally, just because it's tight enough. We're already starting to see it in a couple of markets, but it's just way too tight on the world stage to hold down. So it's got the largest recovery. If they get up around 120,000 short, you can expect about $1.50 out of a move like that if they cover. And that would be forced by the cash market, but maybe not till early fall.
And let's talk finally about cattle, which are making new highs for the move here, did on Wednesday's trade. Is that market going to continue to be putting in these orderly highs, and are the futures going to catch up with this record cash trade? Is that why we keep pushing up here?
Yes, it is, though. I think so. And what I like about this market is that the consumer hasn't pushed back too hard yet. And so I feel like we've got room to go in the longer term. There may be some pretty big bumps here, but when you hear reports of feedlots, suspending their buying operations because there's just not enough calves to find, and the ones they have are too high priced, I mean, that really speaks to the numbers of cattle we have out here. It's pretty shocking. And so I would expect one more push, but it may not be till fall, but one more push where we can get some stronger numbers. And after that, I'd be careful, because I feel like the consumer will push back at that point. But so far, we're not quite there.
Yeah, we'll see if we go back to those contract highs. That's really the next objective, isn't it?
It is, and that makes the chart look good too, because like I say, cattle don't really make spike highs. They make kind of a long rounded highs, and that's kind of what I've been looking for. Exactly. So,
all right, thanks for joining us, Kevin Dooling with KD Investors. That is Markets Now.